Back in January, the CLO token hit an all-time high of 91 cents, standing tall as a seemingly unstoppable asset in the market. Today, it trades around 8 cents. Looking at this chart, you see a brutal, straight-line 90% drop from its peak. When you see a collapse of that magnitude, you have to ask a blunt question. Are we looking at the graveyard of a dead project or a severely discounted second chance hiding in plain sight? It is incredibly tempting to look at a chart wiped clean and think you can catch the exact bottom. The fear of missing out on a recovery trade often overrides the fear of losing the rest of your capital. The token is CLO, but the machine driving it is Yield Finance. And right now, the underlying protocol is executing upgrades that tell a very different story from what the price chart shows. But blindly buying a 90% discount just because it looks cheap is the fastest way to zero. You have to evaluate the mechanics to see if the value is actually there. Take a look at this comparison table. Yei Finance operates essentially as the Aave of the Sei Network. It features a lender, a DEX, and a bridge, all consolidated into one interface. You deposit your crypto to earn yield, or you borrow against your own assets. There are absolutely no middlemen involved in the process. This setup proved highly effective. At its absolute peak, Yei Finance controlled nearly half of the total value locked across the entire Sei ecosystem. Now, the core development team is rolling out their next major iteration, an upcoming cross-chain upgrade called Clovis. This map shows exactly how Clovis is designed to function. It aims to unify fragmented liquidity pools across Sei, Ethereum, Solana, and Sui, routing them all into one central hub. The trade-off here is straightforward. Utilizing Yi provides access to consolidated cross-chain yield, but it requires you to accept the early-stage smart contract risks of a smaller network, rather than sticking to a battle-tested chain like Ethereum. If technology is expanding, we need to look at why the token price isn't keeping up. The answer lies in supply mechanics. CLO has a hard cap of 1 billion total tokens. Here is the problem. Out of 1 billion, only 13% are currently circulating. The remaining 87% is locked, a massive weight hanging over the asset. Yet this 13% active slice still commands a $25 million market cap. Complicating matters further, the developers have not confirmed any form of a burn mechanism. There is no automated system to destroy tokens and offset new ones entering the market. This means the locked 87% represents unmitigated future sell pressure. As those tokens hit their unlock dates, they will rapidly flood the open market. Holding CLO long-term means opting into extreme inflation risk. Mathematically, this incoming supply will suppress the token's value, regardless of how much the underlying Sei ecosystem manages to grow. Translating that supply risk to the immediate technical reality, CLO is currently trading right around 8.5 cents. Following the initial collapse, the current market sentiment is entirely focused on trying to establish a baseline for recovery. On this chart, the exact level to watch is 15 cents. That heavy horizontal line is the ceiling the token must break. Reclaiming that threshold is the clear technical signal that genuine momentum and buying volume have returned. The risk here is trying to predict the breakout before it actually happens. Allocating large amounts of capital right now relies completely on hope rather than technical confirmation. Entering a trade below 15 cents technically gives you the maximum discount, but you are buying into a downtrend with zero confirmed momentum reversal. Bringing this all together, Yei Finance operates with proven utility. It remains the largest DeFi protocol on Sei and holds verified total value locked. We can map out the exact dynamic on this quadrant chart. The Clovis cross-chain expansion plots high on the reward axis, offering serious technological utility, but the incoming token unlocks plot equally high on the risk axis. If you decide the trade fits your strategy, CLO is available on centralized exchanges like Binance and KuCoin. If you prefer a BEX, you can route through CLO Finance directly on the Sei Network. Which brings us to the final scorecard. Our verdict is to watch. This asset is strictly a short-term momentum play, heavily reliant on an upcoming upgrade, rather than a safe asset to buy and hold. Placing capital into CLO grants you direct, high-leverage exposure to cross-chain liquidity growth. But the trade-off is severe. It requires intense active management to monitor that 15-cent level and dodge the incoming waves of supply dilution. If you found this breakdown helpful, drop a like, share it with your network, and subscribe for weekly crypto breakdowns. And remember, this is not financial advice. Always do your own research. So what is your read on Yei Finance? Let us know in the comments if you are bullish on the Clovis upgrade or staying away because of the token unlocks.